we up here at LA SneakerCon. So we're gonna make the video while we walk around, just look at the charts on our phone right here. And yeah, just go over the charts. Tuesday chart loading. And we have the orb level set, right? You guys see here. We had a nice drawdown coming into that Tuesday session. So in my mind frame, I was like, okay, well, I want to see how this level holds off the open. I actually took a very good entry off the open on the 636 level. We were able to catch a very nice move up into the upside to 639 and 640. And then we had a sharp rejection back down to 636, which then ended up failing and went back below 636 all the way down to 635. And then we bounced again and closed out the market up into 640, which was actually that level of rejection. So that was Tuesday. We were able to take a very nice entry off the open bell going into Tuesday. So we were happy about that trade. The next trade we took was on Wednesday. And we let the orb set up. Once the orb set up, we were kind of getting, in my opinion, for me at least, I was getting very mixed signals on what the market wanted to do. It's kind of playing games a little bit. As you guys can't tell, you see it break below the orb and break back into it, break below it, or break above it and then go back below into the orb. So it was doing a lot of going back and forth a lot on this session. So I think I took a very, very light entry. I made money, but I didn't make a lot of money. It was like somewhere around this level here. I took a rejection off of this play, and I was trying to catch the rejection off the highs of the orb high, which then ended up reversing. So that's what made me stop out of it. But we did make money going into it once we caught this initial entry on the orb rejection. So that was Wednesday. And on Thursday, we had a very nice move to the upside. So I just took calls going into this day, but we got faked out of this play. We took initial calls here once the orb level set, and we were able to catch a little bit of a move, but then it rejected on the very next candle and dumped back below the orb. So that's what stopped me out. Kind of did a little bit of that same wham the early morning session, but then we were able to catch it. Or the move actually ended up happening after, time progressed and things moved forward. So we missed this whole move to the upside all the way to 650, but it did end up indeed doing what I anticipated it doing. We just were not able to catch it, unfortunately. So that was Thursday, and yeah, we just missed out on that whole move, unfortunately, just due to this candle right here. Literally, that one candle stopped us out. So that was the session for the week. Like I said, we made a little bit of money, but not a whole lot. We didn't get to fully execute because Monday was closed. Friday, we were liquidated the market, and we just said, you know what, we're going to come back next week stronger. So that's exactly what we're doing. Tomorrow, we're going to be back in the market. And today, I wanted to hop on here and talk to you guys about what to look for in the market. So, all right, guys. So here we have the clear charts. And the levels are still the same, honestly speaking. We did break below that 641.50 level going into the Tuesday market session. But we ended up reclaiming that level. So what does that mean? This week, we're going to have to be very, very cautious of where we go from here, because we can go higher, but we also can go lower. After that sharp projection of 650, we have a very, very high chance, high likelihood of it failing and going back down to the 641 level. And then if we fail that level this time, I think we will definitely see lower, back below 635, possibly even 630 this week. So that would be my prediction. But if we ever reclaim 650 and push back above 650, we can see as high as 654, if not higher. It just comes down based upon whether or not we hold this 641.50 level. That is really the line in the sand. You guys will see numerous times we've retested this level, time and time again. It has bounced, it has rejected, it has done a lot of movement in this area from 641.50 to 647. That's really like the range that we're in. Anytime we break above that 647, we go to 650, we reject. Anytime we break below 641.50, we typically bounce if it doesn't go to the next level, which is 636. So 641.50 is the line in sand, and 650 is the high that we need to break in order to see higher. So that's the watch list. That's what we're looking for. So hopefully you guys enjoyed this video. Like I said, we up here at SneakerCon LA, so it's probably gonna be a long format content. I'm gonna post it on the YouTube channel, and I hope you guys make some money this week. Hope you guys stay abundantly blessed. Stay invested. Don't lose faith in what you're doing. Remember, it's a process. So enjoy every moment of the process and learn from every experience that you have in the moments that you experience. And I'll see you guys next week.